The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 28th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Fortune Knocks at the Door of Those Who Are Prepared. Louis Pasteur, he once said, in the field of observation, chance only favors minds which are prepared. Even in the little things, those seemingly insignificant events of life, it is important to be prepared. Opportunities to learn new things they're available to us all of the time. Nearly every moment offers opportunities to grow and expand our consciousness. How often, folks? That's right, all of the time. True story. Thomas Carlyle spent 2 years writing his great piece of work about the French Revolution back in the 1830s. He literally poured himself into his work, striving to capture on paper everything possible about the French Revolution. He bundled up this large manuscript, took it to his closest friend, John Stuart Mill, for Mill's personal evaluation. A few days passed. Mills rapped at Carlyle's door and couldn't wait to hear Mill's comments. When Carlyle opened the door, he noticed that Mills looked gravely ill. "What on earth happened?" asked Carlyle. Mr. Mill told Carlyle that his maid had used the bundle of papers, the manuscript that Carlyle had spent 2 years writing, to start a fire, not knowing that the precious fuel that she had used was 2 years' worth of work. 2 years' worth of work gone up in smoke, literally. Days passed, depression set in, and then one day, peeking through his window, looking into space, he noticed a brick mason building for a neighbor a wall. Brick by brick, the mason worked gently and lovingly to build this security wall. Suddenly, the idea struck Carlyle like a flash of lightning. He, too, needed to be a brick mason and reconstruct his manuscript, brick by brick. Peace came to his mind, and the ideas just simply began to flow again. Carlyle pushed aside defeat and produced what became the most colossal work of his lifetime. Yes, folks, brick by brick, word by word, thought by thought, dream by dream, chart by chart, indicator by indicator, we too can build the substance from which the masterpieces of our lives are produced. Carlyle's book, The French Revolution, was published in 1837, and still to this day, it is the source for those that wish to get an accurate account of the French Revolution. Brick by brick, folks, become the brick mason of your life and build your masterpiece. Well, let's go check out the masterpiece of these markets. I hope everybody out there had a fantastic weekend. Great to be back with you. Right now, we've got the Dow futures are off about 6 points, trading out at 15,491. S&P futures down 3/4 point, trading out at 1753. NASDAQ up 3 3/4 points. Excuse me, trading out at 33.77 1/4. Russell 2000 up just slightly out here. King dollar up 13 ticks, trading at 79.38. We'll take a look at the currency markets and anything else that you would like. Just give us a call at 877-927-6648. Would be happy to take a look at your stock, your commodity, anything that you would like out there. A peek across the globe here. Over in Europe right now, DAX is off 14 points, no big deal. FTSE down 7 over in Asia last night. A nice little green party. Everything was up. The Nikkei up 307 points. That was up 2%. Hang Seng up 108 points, 0.5%. Really flat in Shanghai, up 96 cents out there. Let's start off by taking a look at the S&P 500, the futures contract. If you are listening on your radio or your mobile device at TFNN.mobi. Thanks so much for doing that. I'll tell you what we're looking at here. Remember, you can catch the live stream of the show by going to the homepage of TFNN.com. In the upper right-hand side, you'll see that button, 3 little smartphones. Click on that. This show will stream live to you. What we're looking at here on my chart, we're looking at some shaded colored boxes. They're light blue, kind of greenish, and yellow out there. Now, what's interesting about these boxes is these boxes represent the natural harmonics of retracements that we have seen ever since the lows here. I'm just simply coming back to the time period of 9 o'clock in the morning on October 17th. We can go back a little bit further if we would like out here. So if this market is going to do something more than a normal correction. And we can see that futures had traded up nicely last night, and now they have pulled back. In order for there to be any kind of correction that one should open their eyes about, we're going to need to see a correction greater than what we have seen here recently. And at this stage, we haven't done that. What we have seen is a correction so far from high to low, and the high to low that I'm speaking about is the high that came in at 10 p.m. last evening. That got up to 1762 and a quarter. You'll see that's the blue box. That's this bluish box right here that we're taking a look at. And so far, price has really fulfilled that harmonic in the pullback out here. Could go lower. What's the next lower level? Well, you got this little yellow box that occurred here at the most recent retracement, really, that we saw out here. That would send price down to about, well, that actually completed as well, 1751. And so, we're really looking at the blue and the yellow box. Those retracements are done. We'll see if that's it for the market. If not, then we're more likely to see a little bit of a deeper retracement, a test of probably the 1748-ish range. As long as that holds, it is long and strong in this marketplace here. We can also see that what the ES Mini did by taking a look at the EKG, using that relative strength indicator, that 14-period relative strength indicator, we can see that the high was made last night and got into an overbought condition. The market has worked its way off, and how has it done that? It's moved down towards that oversold level, down towards the bottom of that relative strength indicator. So I think it's relatively easy to understand what the market's just a normal breathing pattern thus far out here. If these markets are going to move lower, these other harmonic retracement patterns are going to have to get broken. They're going to have to establish something newer to the downside. At this stage here, not yet. Now let's go take a look at the longer-term charts out here. We had the weekend. This is the Dow. Let's stay on the S&P 500 out here. Let's go ahead and pull up the ES. Here's the weekly chart for the ES. You can see here last week, nothing bearish about this configuration. Out here, price wants to move higher at this stage. That's the weekly chart. If we take it, we're coming to the end of the month here. What's the month end is what? Is that Thursday? Wednesday or Thursday? Let me pull up my calendar here. I think it's Thursday, isn't it? Yeah, Thursday is Halloween out there and the end of the month, October 31st. So let's go we're close to a monthly chart, or close to the end of the month. Let's go take a look at it. Look at this chart here. Do you see any bulls in charge here, in place, in the month of October? Absolutely not. What does this suggest here? Well, at this stage, it looks like price wants to go up and get to the top of that rising price channel. Now, if we take a look at different A to B equals CD patterns, if you come off of the lows here in March and take a look at the first A to B equals CD up, what you'll see is that the 1896 level, that would be your 1 to 1.618 A to B equals CD. You can see here thus far prices above the 1 to 1.272 area. Got a little bit of a dark cloudish cover candle. That occurred during the month of August, but immediately that forecast was blown away the following month in September, and most certainly gone by the wayside here thus far in October. So you could say 1896, that would be 1 A to B equals CD up. We could take a look at Also, take a look at a little bit larger A to B equals CD up with inside that pattern. We'll go ahead and we'll make that red. You can see that's the one that shows 1776 in the ES Mini out here. That is a likely target. Now, so far what we've been up to is 1762.25. That's actually the high so far this month out here. So 1776, that would be in the offing. I would say, quite frankly, and take a look at this A to B equals CD, unless we see some kind of, I didn't mean to do that. Let me pull this back here. Unless we see some kind of significant reversal here, we're more likely to see 1893, 1968. Now, it's going to be running into the top of the rising price channel, but that's not necessarily, that could just simply be an area of a pause out there. But so far on the monthly chart, we're not seeing any kind of bearish action, nor have we on the weekly, and nor have we on the daily. As we switch this back to the daily time frame out here, no. Now, what we did, for me, the real breakout, I think I've mentioned, if I haven't mentioned this here, I certainly had mentioned it in the newsletter. I forgot to this morning here. What I'm looking for to confirm a real breakout that price really wants to move higher is going to be a close above 1754.50. The area was pierced again on Friday, but the actual close was 1753.75. I want to see it prove itself, and by proving itself, that means that we're going to see a close above this 1.618 butterfly again. This is the daily chart that we're looking at inside the ES Mini. But thus far we have seen no bearish reversal signals. We see one here at this pattern, and that would have me change my tune just a bit. The way that it would change that tune would be nothing more than a retracement, than a bit of a pullback here. But so far, if you see a close today above 1754.50, then you can take a look at those longer-term patterns more likely coming to fruition out there. That is on the ES Mini. Let's go take a look at the Wowzer out here. Here's the monthly chart for the Dow futures. Nothing. Now, the key here for the Dow is to get above this bearish engulfing candle, but really chipped away at it last month in September. You can see here thus far, filling in the rest of it. If the Dow closes above 15,600, we will see higher price. And really, this is going to be the key. The key is going to be, and here's the interesting thing, we refer to this, I've certainly referred to it on the air as being the weak link out here. It just really depends on the time frames that you're really looking at. If you take a look at the monthly chart here of the Dow futures, please tell me, where is the weakness? There is no weakness here other than that bearish engulfing candle from the month of August. That means the high of 15,600. That becomes its resistance level, because I believe the high the month earlier was 15,580. So 15,600, that's the juggernaut. Now, we close above that by coming into Thursday out here. There is no bearish reversal signal inside what we consider to be the weak index out there. Something to think about. Right now, we got gold back 20 cents. It's trading out at $13.52. Silver's off 6 pennies at $22.57. Light sweet crude, that's up 22 cents, trading out at $98.08. We get back from this breakout here. We'll go take a look at the commodities. We'll take a look at the currency market or anything else that you'd like. Just give us a call at 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, this coming Wednesday, Andy Hecht, author of the Technomental Commodity Report, he's going to be doing a workshop to all subscribers out there. That's this Wednesday, October 30th at 6:30 p.m. So get over to the homepage of TFNN.com, sign up for that, take advantage of his current newsletter rate, $39 a month. That is going to be going up as well. All subscribers with the opportunity to check out the roadmap that all investors should use, but most don't. I know I'm going to be present at that workshop. You should be as well. Let's go check out the Great British Pound U.S. dollar. This is the daily chart we've got up on the screen. What we know about this currency pair, well, we know it's 2 things. Number one, it had produced a 0.786 Gartley sell pattern and a 1.272 butterfly sell pattern, and that pattern got blown away. Wide-ranging bar on September 18th. Oftentimes, when these patterns fail, well, the first thing they're going to do is make that 100% move of a move. And that's, in fact, exactly what the Great British Pound has done. What's a 100% move of a move? Excellent question. What that is if you go back to the swing point that you used in order to identify that Gartley pattern, that's your X point. That's your 100% move of a move point as well. That's the swing point in this case here from January 2nd, 2013. The Great British Pound out at 1.634 out there. We can see that the Great British Pound, after it broke through that Gartley cell, that butterfly cell pattern that you can see here on my screen, that it made its 100% move of a move. And here's the thing. What these patterns often turn into is not just the 100% move of a move. That's a normal resting spot. It's a normal. Swing points are areas that you always want to pay attention to because they just simply are natural magnets for price to go up and test either the low or the high out there. If you get to the low, that's still 100% move of a move. Remember, we're not trying to be perfectionists here because perfection, you know what that is. That is the lowest standard on the planet. So many strive for perfection. Don't do it, folks. It can't be obtained. You'll never get off the schneid if you look for perfection. You're just trying to be extraordinary or outstanding out there. That is the level that you want to be able to live at. And in this case here, what we know about the Great British Pound, it's also now completed that second pattern. No real reversal signs out here. Well, I take that back. The first reversal signs that we saw out here, we did, as it made 100% move of a move. We did get a bearish engulfing candle. On October 3rd, we had follow-through, in fact, on October the 4th out there. We had follow-through, and all that it was able to do was make a 0.382 retracement of just the C to D leg. Folks, really, your retracements are really from your A to your D point out here. I don't have that mark because it was not even close. I do have that mark. That would have taken the Great British Pound down to $1.57. Has not been able to make that. In fact, what we saw the Great British Pound do here is just kind of work sideways, and then boom, another big up-thrusting day on October the 17th. So far, all it's continuing to do is just work off what really was a overbought status out here. It does look to me like the Great British Pound actually wants to move higher out here. That's what the daily chart looks like. Let's just switch over. Let's take a look at the weekly chart, see if there's anything else out here. Well, on the weekly chart, what we can see is this black horizontal line going across the screen. That is an area of some significant resistance. It was resistance back in December of 2012. It was resistance back in September of 2012. It was resistance back in May of 2012. What is that level? Hasn't hit it yet. I would say right around the 163-ish range. So right now, as we take a look here at a weekly chart, you're not seeing any really bearish action. Now, we did get a doji last week. And a doji at resistance means a whole heck of a lot. That says now that the actual resistance level is going to be the high of last week. And that high, 1.625. Now, unfortunately, if it breaks above that high, we can't sit there and say it's going to break up because it's going to run right into that consolidation area, that black horizontal line. However, if we do see a close, we'll give it the number of 1.634. If we see a close above that, guess what? We will see the Great British Pound, U.S. dollar, make its move probably all the way back to the highs out here of 167, taking us back to May of 2011. That is what the weekly chart shows. We can see substantial support here at the lows out here when you take a look at all of those Fibonacci retracement and expansion numbers, how they all converge in one area. What's that area? Good question. That is in the 148 level, 148-ish level out there. So Great British Pound, U.S. dollar, that's got room to run to the upside. What's going to be interesting here is the euro U.S. dollar, because here's the weekly chart on the euro U.S. dollar, and boy, if I blow this up last week, it basically closed close to its session highs. It's trying to take on resistance. Is this the spot where the euro gets turned around? Only time will tell. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 22 points, trading out at 15,547. S&P is flat, down 88 cents right now, trading at 1758. Composite off 3 points at 39.40. Russell 2000 down 28 cents, trading out at 11.18. Apple out with numbers after the bell. They're up $2 right now, trading out at 5.27. Microsoft off 15 cents. Google up $1.76. That's up 0.1% out here. Leading the charge, the upside is Apple right now. Bristol Myers Squibb actually taking over the leader spot. Dollar-wise, that's up $2.50. Oh, not to be outdone by Clovis Oncology, CLVS. They just jumped in the lead out here, up 10% this morning, up $5 and change. Baxter International, BAX, that's up about 3%. ResMed, RMD, up 3%. NQ Mobile, having gotten hammered, that is up 14% here this morning, up $1.55. Marathon Petroleum, up nearly 2% this morning, up $1.29. Solar City up 57 cents. Not too much else to the upside. To the downside, Sohu Communications, SOHU. That's off 9% this morning. That's down $7 and change. Changyu Communications, CYOU. That is down 16%, off about $6. Edwards Life Sciences off 6%, nearly $5. Biogen, BIIB, down $3, down nearly $4 now, off 1.5%. Amazon.com having a heck of a week last week. That right now is off 4%. I'm sorry, off 1.5%, down $4. I'll get my eyes switched around here. Alexion Pharmaceuticals off 2%, down $2.50. McKesson, big winner last week as well. That is off 1%. No big deal out there. Again, our call number 877-927-6648. Let's take a look at the commodity sector first. Then we'll go take a look at some of these stocks here that are popping and dropping. Let's go start off and take a look at Goldilocks right now. Gold is trading out at $13.50. Really not much action out here. What we can say about Goldilocks is it's in between floors, meaning in between the 0.382 and the 0.618 retracement floor. That's coming off of the swing point high from August 27th down to the low that was recently put in here October the 15th. 1364 next on the target for gold. If we can see another nice wide-ranging bar out here, maybe some additional volume behind a move. And what that is setting up is the A to B equals CD up inside Goldilocks, taking it on into the 1555 to 1575 range out here. Want to really see it clear this evening star reversal candle configuration. So the high here, not just the 1364, that's just one element for us to be paying attention to. But really what we want to do, well, if you are long gold, I'm long gold, what I want to see is I want to see it close above 1375.40. That is a resistance area, because once you get above that, then that really frees up making that 100% move of a move. That would then take us back into that swing point, another evening star reversal configuration, taking you back into the August 28th level, somewhere between 1413 and 1434. So it's not so much the 1364 that those that are long gold want to be paying attention to. We really want to be able to see it close above that evening star configuration. That is the high from September 19th. That is how we take a look at Goldilocks. Hi-ho silver. Right now you got silver trading just slightly lower, sideways action, really trading out at $22.50. It, too, has that resistance at that 0.618 and evening star formation pattern. So that says in order for silver to really get some legs, those that are long silver, I'm long silver, hi-ho silver, we want to see it close above 23.44 out there. 23.35 is the 0.618 retracement level, and that would give us a indication that silver, too, wants to make that 100% move of a move, getting back towards that $25.12 level out there. Light sweet crude, if we take a look at light sweet crude right now, that is trading down, flat. It's off 6 pennies out here. So a flat trading session as we speak. Looks to me more so, again, all that light sweet crude is done. That's done quite a bit. But what it has done, it's moved into that oversold condition, and we're seeing the normal work off of that, but more so just simply by moving sideways out here. If you are long or short this, you want to really pay attention to, in my opinion, you want to pay attention to the high from October 23rd, 98.29. If you do see it close above 98.29, the next level is really just up a buck above that, the $99-ish range. That's the black horizontal line going across my screen. That should be resistance. If we see light sweet crude get back up above that area, it'll be back up above that long-term consolidation level. And that says, you know what? You could easily see light sweet crude try to take on this trend line that once it broke below, it was not able to get above. This is this red diagonal line going across my screen. You can mark this on your continuous contract. I would just simply use the low from the trading session of April 18th, $85.61, and I would just use the low of the trading session from June 24th, and that is at $92.67. That has acted as a resistance level. That is on a light sweet crude. Let's take a look at the 30-year Treasury here, also moving sideways, having gotten back to its resistance zone of that long-term sideways consolidation move that was in place from August of 2011, really through the 2013 timeframe. We saw a break below that right around the July type area. Once you break below a consolidation level, in this case here, it was tested. Once it was already tested. Once we saw the break below that, was tested back on August the 12th out there. Right now we're seeing another test of those areas here. No wide-ranging bars. Maybe everybody just waiting on the Fed to release their minutes. That would be coming up on Wednesday sometime around the 2 o'clock time frame out here. But at this stage here, just small bodies. Just somebody got their thumb on the 30-year Treasury, just like they had their thumb on the, I don't know if it's their thumb, but I'm just calling it a thumb, on their on the 30-year Treasury back here during the trading sessions from about September the 26th through the October the 9th out there, as we just saw small-bodied candles. Now, there is a confirmed A to B equals CD up that would take into 137.05, but if we can see another wide-ranging bar, 138.22 is most certainly in the cards, and that is on the 30-year Treasury. If we take a look at natural gas, what contract do we have up here? X, so we've got X marks a spot. That is November. If we take a look at the November contract out here, you see a little rising price channel as well as a descending price channel. The blue-colored lines, that's your rising price channel, and we can see that price is getting knocked down anytime it hits the red diagonal lines to the downside. That's your descending price channel. A little bit of a tug-of-war going on here in the at the moment between natural gas, and we'll see which way, if any, this thing is going to break out. Should be down near some pretty good support as we speak right now, trading out at 359. That is on natural gas. Now, let's go check out some of these stocks here that are popping and dropping in the marketplace up here. Let's go take a look at what's up. Well, we've got CF Industries. CF is the ticker symbol out here. That's trading up 4%, up about $8 and change. Looks like it is taking on a swing point here, trying to get over a little bit of a cluster. This cluster of swing points taking you back to the October 7th high, 217.19, 532,000 shares. Then we tried it one more time, or it tried it one more time with 1 million shares on October 21st. So far today, 169,000 shares. Not too bad for this equity in 12 minutes of time. If this closes above, which one do we want to give? Yeah, we got to give it. We have to do it. We don't have a choice. We've got to use October 21st. 217.66 out there. That would actually set up an A to B equals CD. There's a number of them that you can use out here. Let me pull CF Industries back just a tad. So this thing has certainly been consolidating ever since this little price breakout here on June the 19th. Let me pull this back just a bit. We had some nice wide price spread and accelerated volume. So here's the breakout session inside CF Industries, June 19th. We can draw a line across the bottom of that just so that you can easily see this. And then you'll see that that has been tested now on two separate occasions. So the volume, let's draw a line across the screen here on the bottom for the volume as well. That'll help us understand a little bit about CF Industries. So we see the test here on lighter volume taking place April 17th, 1.3 million shares, truly going against the breakout of 2.3 million shares. We see another test of that area on about 1.2 million shares, 1.5 million shares, not enough volume to try to bust it down. That set up the bottom of the consolidation. Now we pull this back. The top of the consolidation, I would say, the extent of it really right now, you'd have to say probably about the September 14th area. So that's, we're going to call that 228. So 228 down to 173. Okay, 183, 193, 203, 213. 223. That's $50 right there at 223. So yeah, we're going to say it's about a 50-ish point move, maybe more, maybe 50, 55 points out there. So this would say that this should find some pretty decent resistance. When it gets into that 228-ish level right now at 218.50, 218.75, looks to me like that's where it is going to head to. And that'll go ahead and take it actually back to the swing point high from January the 30th. That is on CF Industries out there. In the lead in the clubhouse, up $8 and change. Clovis Oncology, CLVS is the ticker symbol. They are up there, the second leader out here. Second, yeah, say number 2 is also a leader, CLVS. That is up 10% this morning, so gapping up. But this one here does not look as bullish as CF Industries does. This thing here is basically just running right down into a resistance gap on the way down. Not a ton of, not a really liquid stock out here. As an idea, back on October the 15th, it traded a total of 192,000 shares out here. Did have a nice breakout, wide price spread, accelerated volume on June the 13th out here when this did 3.2 million shares. But right now, really running into resistance of this most recent gap down from September 25th. 1.1 million shares exchanged hands that day. So far today up with 215,000. So it's going to try to take on that gap. If it can get inside here, that should set up a run to the low of September 24th, which would be 71.86. If it can close inside 71.86, it would repair that window, and those areas no longer acting as support or resistance. That is in Clovis Oncology. Let's go check out what is moving to the downside out here. To the downside, you've got Sohu Communications, SOHU is the ticker symbol. They are the leaders to the downside, SOHU. Down nearly 10% this morning. Let's check out the volume behind the move and where this thing is headed to. Not a bad-looking stock chart other than today out here. Oh, okay, and still not too bad as far as coming off of some lows back in July of 2012. However, today, we've seen 968,000 shares to the downside thus far. This after making a high with 994,000 back on October 21st. So this got some volume coming out of it. This should find some support out here depending on the continuation of this volume. And there's a cluster of volume bars right out here, September 16th, September the 17th, as well as the 18th. So the low here of 66.95 is likely the area to be tested. If that area holds, okay, so be it. If that area fails, then I can see another high volume bar. Well, then you've got this area back around July 29th. 62.29. That would be your next area to be paying attention to, which is really clustered around a set of swing points back here in August of 2013. That is on Sohu. Chang Yu Communications. Let's go check out Chang Yu. Their ticker symbol CYOU. I would have preferred CYA. No. In any event here, CYOU is a ticker symbol. Chang Yu gapping down with some volume. This is not the first gap to the downside. This is the second gap to the downside. The first one here taking place with volume off of the highs was on July 29th. That had 1.5 million shares. It's going to beat that mark today. So it looks, because we've already seen 600,000 shares off of the highs out here off of yesterday's Friday's close, I should say. Closed at 35.20 right now, trading out at 29.73, and you've got volume coming out of this thing. Where is it headed to? Well, we pull this back. Looks like it's headed all the way back down to this high volume bar from August the 3rd, somewhere around the $21-ish level. It's at $29.73 right now. Let's see, what else do we have here? Edwards Life Sciences. Let's go check out that one. I don't know if it still is. At one time, it was a high flyer with inside of the IBD 50 stocks out here, gapping down here this morning. Let's take a look at this. Now, this thing probably no longer inside. It clearly is no longer inside of the IBD 50. Probably lost that status back here on October the 9th when it blew apart with 8.8 million shares coming out of it. It blew apart again, blew a big tire. Looks like it blew more than one. Looks like it blew at least a couple tires here. That was back on April 24th when this thing had 11 million shares to the downside. So far in today's trading, it's down with 613,000 shares. It's going to make a run for these lows again from April 24, 2013. So 63.50, 66.60. Ooh, the devil is inside Edwards Life Sciences. Looks like that is where it's headed. Right now, the Dow is down 11, S&P up 66 cents. Let's go barefoot water skiing, folks. It's a relatively flat market out there. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 14 points right now. And November the 8th, 9 a.m. to 4:30 p.m., our man Basil Chapman's going to be hosting his Master Trader Series course out there. You want to sign up. You want to sign up now. You'll save $200 off of the registration price. It includes the opening week of his month letter. a month of his newsletter service. I know I can get this out. If I just focus, I know I can do this. The opening call, that's $128 value, as well as get a copy of his CD book, Introducing the Chapman Wave. That's worth $249. This is an offer you can't refuse, folks. So all the details on the homepage of TFNN.com. That is Basil Chapman's Master Trader course. We've got that coming up for you on November the 8th on Friday, and then this coming Wednesday, Andy Heck, he is going to be doing a workshop as well for all of his subscribers. So get all those details on the homepage of TFNN.com. You know, as I was surfing through the charts out here, one thing that I noticed as we take a look here at the core charts was Intel. Intel on Friday quietly confirmed an A to B equals CD up. How did it do that? Well, I'm glad you asked me that question. The B point of an A to B equals CD up in the case of Intel is from September 19th. Something to think about, because that's really the swing point that we're really dealing with here inside our marketplace as well. September 19th, September 28th, I believe, as well out there. Well, in this case here, September 19th, that has volume of 28 million shares, and the high is 2408. We saw, actually, this is the second time that we've seen a peak, a confirmation with a close above that level. The first time was on October 21st. Then the market pulled back just a bit, and on Friday, with even more volume, 59 million shares, confirming the 1-to-1 A to B equals CD up. Well, price is only a bit higher, 24.66. That's at trading at 24.32 right out here. What we're going to also see at that level, nonetheless, is going to be a resistance of a open window. So the top of which is the June 20th high, 24.75. That's where Intel is headed to. If it gets inside the gap, if it closes inside the gap, and that's got 63 million shares. It had some nice juice, some nice volume on Friday. If it's coming in there with more than 63 million shares, or even I'd take the 59 million shares as well. That's good enough for me. That says it'll go repair that open window. That means it'll go and at least test the low of June 19th, which is $25 even Steven out there. If it can close that area, then we'll see Intel head all the way back to its swing point high from June 4th out there in the 25.35 to 25.98 range out there. That's important. As we take a look at indexes out here, the SOX index has been one that has been saying, it wants higher price because it had a sideways consolidation. It was telling us that with Intel underperforming the marketplace. And Intel is the top holding, I believe, inside the SOX index. Where is it? It should be on my screen. Probably is. There it is, lower left-hand side. So here's the SOX, a nice 43-point trading range. It did have that gap down, big gap down on October 23rd. So it's got a bit of a mountain to climb out here, which means it gets back up to the October 22nd low, 504.28. But you know what? If it gets inside and closes below or closes above 504.28, that window will have been repaired, and that will go ahead and free up the move for a 43-point move inside of the SOX. That'll take it up into about the 533-ish type range. Folks, it is Marvelous Monday. Thanks so much for joining us. If you're off to start your day, have a great day, and always remember this. You have an amazing power within yourself, and that power, it's so strong it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. Oh boy, will it paint magnificent masterpieces. But most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.